Hello, dear students. So, here we come up with another very important concept, that is cash flow statement. And I cannot teach everything in one single video. So, right now we are covering up how to compute cash from operating activities, that too with indirect method, which is very important for accounts, for FM. So many of 12 students who are in CBSE board, and for everyone this is very important, right? So and when I start with this, one thing I want to share, please check up my other video also, wherein I always say that the pumping heart of the cash flow statement is plant and machinery and accumulated depreciation account. So how to get a very good grip on these two accounts, and that will be helpful in hire purchase, non-trading, final accounts also. So there's a separate video for that. So do check that. Here in this video, we are answering how to compute cash from operating activities with indirect method. Okay, direct method is very simple. We start from collection from data, and then we move on to the payments what we make. So in exam, mostly when they say prepare cash flow statement as per AS3, then in that case you have to make it as per indirect method only. Just 1 minute. There's some trouble in the video. 1 minute, I'll share it again. Just 2 minutes. Yes, here we go. Okay. So how do you start? What is the meaning of cash? I know that my net profit is 50 rupees, but I want what is my cash profit? What is there in cash? So there's a difference between the net profit and the cash profit, basically for 4 reasons. Whatever add and less you do, you can cover it up in these 4 bits. So let us see that what are that. In net profit as per profit and loss account, add non-cash expenses which are debited in the profit and loss account. Now, as soon as we said non-cash, immediately every student knows it is depreciation is a non-cash beautiful expense which reduces the profit and no money is going out. So if my net profit is 50 and if I have debited depreciation 10, but no money has gone out, so can I add back the depreciation, remove that expense? If I remove the expense, what will be the impact on profit? Profit will increase. I want to repeat my example. I want to go very slow. That is, my net profit is 50 after depreciation, after debiting depreciation 10. Now, depreciation is a non-cash expense. So, add back the depreciation so that you get 60 rupees cash profit, and logically it is correct. Your net profit is 50 after debiting depreciation, but in depreciation no money has gone out. Same way, preliminary expenses which are just written off in the P&L account, it's a book entry. Provision for taxation, provision for doubtful debts, these are just debited in the profit and loss account and no money has gone out. So if you remove them, the profit will increase. So all the non-cash expenses are to be added to the net profit to get cash profit. Same way, add non-trading expense. Now what's the difference? Non-cash expense means expense which are not in cash. Non-trading expense are expense which may be in cash, but they are not related to your main core operating activities. So what you will do, suppose you have debited interest on debentures 5 rupees, and after that your net profit is 50. But interest on debenture comes in outflow in the financing activity. So why you want to debit it here? Will you debit it twice? If you debit means it's outflow. So interest on debentures is paid in cash, 5 rupees, but it's already shown as outflow in your financing activity. So here I don't want to show it as outflow. So all non-trading expense like interest on debentures, dividend paid, loss on sale of assets, add back. Why add back? Because these are non-trading expense, add. Non-cash expense, add. Now, first I'll take this non-trading income. Okay, right. When I'm saying non-trading income, in my P&L account, is there dividend received? Yes, but dividend received is again income from investing activity. When I invest in shares, I get dividend and I'm already taking it as inflow in the investing activity. Why should I credit and take it as here? And dividend received is not my operating income. So what I should do? Remove. It's credited. So if I want to remove, what will be the impact on the profit? It will deduct. So less. Same way, profit on sale of asset. I want to give an example. WDV 30 rupees asset it is sold for say 37. So how much sale value of the asset you have taken in the investing activity? 37. So already profit is taken as inflow in the investing activity along with your sale value, right? 30 plus 7, 37. Now why do I take the same inflow in the credit side of the P&L account? No. And anyways, profit on sale of asset is not my core operating, trading, manufacturing activity, my core business activity. So if by mistake profit on sale of assets 7 rupees is credited, because of that net profit is 50, then remove it. If you remove and reduce the income, what will be the impact on profit? Profit should become 43, so less. And one more less which rarely comes, non-cash income credited in the profit and loss account, but twice it has come in the FM when cash flow statement was in FM for the old syllabus students. So what is happening? Suppose I receive a government grant 10 rupees and immediately I took it as my receipt under my financing activity. Okay, now what happened? Every year I'm amortizing 2 rupees. So if in the P&L account I write down amortization of government grant 2 rupees, is this your business income? No. Is this received in cash? No. Long back 10 rupees are received. Just you are amortizing the income as per AS 12. So now what I should do? Remove this income because it's a non-cash income. Abhi to koi grant you have not received for 2 rupees. So remove. When you remove, what is the impact on your income? Deduct. I hope you are following this add in less, and if this makes sense, you are getting this video and clearing your concepts, then just on the left hand side there's a like button, hit it, subscribe to my channel for all the updated videos and amendment videos related to tax, share it with your friends and do comment. That makes us also motivated to make more videos. It takes efforts to make these sheets, to make space and an atmosphere for recording. Of course, recording is one shot. I don't believe in practicing and then recording. It's as if I'm teaching last 20 years and the same flow I have been recording this. Okay, right? So once again, I want to give you gist. Indirect methods start with net profit, add non-cash expense, add non-trading expense. Non-cash is no money has gone out. Non-trading, because they have already been shown as outflow in other heads. Now, less non-cash income, less non-trading income. There may be 15 items in exam. All you can put it in this add and less. Finally, you get cash from operating activities before working capital changes. So now we will make working capital changes. Working capital is all the changes from opening to closing in case of current assets, that is datas and stock and prepaid expense, and current liabilities like creditors, outstanding and so on. Right? So let us see this, how we will do this. And you know why I am doing it, because whatever I have collected from data, I'm not having the figure directly. This is indirect method, Had I known what is my collection from data, I would have recorded. But in my net profit, I have already given the impact on sales. So can I give the impact on data? If there is increase in current asset like stock or data, is more money getting blocked in the business? Less. Are you all getting? If there is a decrease in current asset, example stock कम हो रहा है, तो more money is coming in because stock is sold. Datas are reducing, good datas are realized. What is the impact on cash? Cash is increasing. So add. Same way, decrease in the current liability. Creditors were 10, now they are 8. 2 rupees you have paid. So when current liabilities are decreasing, less cash is going out. Increase in the current liability, creditors or outstanding expenses are increasing, you are getting more time to pay, so cash is increasing. Okay, this needs a lot of practice and some more problems, so separately also I'll make one video. I hope these 4 concepts are clear. Add back non-cash non-trading expense, deduct non-cash non-trading income. You get cash from operating activities before working capital changes. Do all this, you get operating profit before income tax and extraordinary item. Now if you go above and check just one step above, yeah, provision for taxation is a book entry, so I have added back, but income tax paid is my actual expense, so I will deduct it separately and I will get cash from operating activities. So this is on how you compute the cash flow from operating activities from indirect method. To take the best of the video, take down this format in your notebook, and while solving 2-3 problems for indirect method, analyze it why you are adding, why you are doing less. So go very slow, and then a time will come when you'll get it perfectly. Still, if you have any queries, you can mail me your queries to, note down, chheda dot dipti@gmail.com. Right? Wish you very all the best. And there is so much more to learn in cash from financing activities, investing activities. And a basic question, why do we prepare cash flow statement? Ma'am, can I not give T format cash account all the details? No. Cash flow statement categorizes the flow, where from the money is coming and where it is going. How much I am earning from business, how much I am earning from investment, and how much I am putting in the form of finance. So lot of things are categorized. So one more part 2 video I'll make to cover up the investing and financing activities. Till then, CA Dipti Chheda here signing off. Bye bye and all the best to all of you.